The following is an update and technical analysis on the U.S. equity markets, followed by the U.S. 500 S&P futures, and then I will deep dive into the U.S. Tech 100 NASDAQ futures and some key transitioning pivot points that I believe are transpiring in the beginning stages in construction on the 2-year and 30-year yield within the U.S. Treasury markets. And stocks once again took another wild ride today after the S&P experienced its most significant drop since September due to Powell's hawkish stance in the presser, where stocks had recovered about a third of the overnight losses, faced early struggles out the open, where the regional bank crisis initially caused a big drop with multiple banks plummeting, but the market swiftly recalled, and I believe in reminiscence of the powerful trillion-dollar Fed response to a similar crisis last March of 2023, in which in turn triggered a violent rally to the upside, where Wall Street seems to be like an addicted meth group eagerly anticipating the next fix from the Federal Reserve. And we are within the beginning stages of taking out this primary reactionary downtrend line, call it a concealed parallel channel that I've been hyping up for quite some time here, where we had an additional reaction. We had 3 major reactionary highs across that entire sphere, took that level out, which was pretty bullish, only to have a false-like whipsaw reaction, retest it, back tested off a major reactionary high once again, and that was good. 4.5-13% drop to the downside, especially for dollar cost averaging up above, and only to take off and ultimately pop that level now. And here we are starting to trade slightly above it with a just what you would call minor price resistance up above. Although near-term potential negative divergences are still transpiring and constructing on multiple indicators, there is a potential chance for any whipsaw-like reaction to go on. Long traders, bull traders, maybe even backtesting this primary reactionary uptrend line would need to defend that level once again, instead of having a false-like reaction and momentum-fueled overshoot back into the trading range, ultimately increasing the odds on a re-challenging of the 48.20 minor price support, additional price support down below, in correlation of the 50-day moving average hovering in down up above off the 47.19 price support as well. But make no mistake about it, you will begin the process of shorting and or squeezing out a ton of shorts that took the bait and especially took the breakdown in a momentum fueled overshoot back into the range, scaling in short here, where it was only a whipsaw-like reaction. And now there's a chance that the regional bank stress is now saving the markets once again. When you consider a beautiful, well-defined inverse head and shoulder classic looking bottom with the split of that neckline taken out convincingly, this could be the beginning stages of an upward trend where I will begin the process of scaling out and taking out all those shorts to the upside. Zooming you in to the 60-minute time frame, we had a beautiful divergent high. We had negative and bearish divergences really constructed amongst all 4 key technical momentum indicators, and that was the catalyst for this potential breakdown sell signal on a re-challenging of the 49.03 price support and or resistance level, and that was taken out with conviction. And once again had a snapback and or counter trend rally, back tested off the 48.86 price support, had a really to the button, especially if you're an active and or day trader, right into the presser when a reporter asked Powell for the additional rate cut odds and or pivot points of releasing and or fixing the cuts. As soon as Powell said no, we had that major reactionary intraday high, and that entire move to the downside, really to the butt end, hardly even setting any stops up above for even a marginal, a 10 basis point stop loss, had a big move and an ultimate crash of a 1.3% day trade to the downside, and that was reflected upon the 48.47 price support, where it took out every single target of mine all the way to the downside, ultimately hitting that last target, where a ton of long traders and or bull traders reversed to the upside, overnight gains here, and then was off to the races. Where I had released inside the community post where there were updated levels on the S&P 500 futures for any active and or day traders, and this was the big key moment where I had added this primary reactionary downtrend line, in which the primary reactionary downtrend line resistance needed to be defended by short sellers and or bear traders for an intraday and or additional big breakout up above, where long traders wanted to take this key additional level out and really to the button, back tested right to the very pivot point and or key inflection point, and it was off to the races after earnings into the after hours, good for a 1.3% move to the upside in both directions. This has been a highly volatile move where you could have the potential for a marginal new high right back into the primary reactionary uptrend line, and that would be the greatest risk reward short trade setup to the downside, issuing in some stops up above, and that is where I will begin the biggest scaling out process. If long traders and or bull traders are able to take that level out, you will additionally burn out the price percent oscillator negative divergence, and we are not too far away from that. And the additional technical momentum indicators will be pouring health back into the trade, ultimately re-challenging the negative and bearish divergences constructed on the relative strength index and the MACD. And that is when a fueled short squeeze setup could occur on a much larger move to the upside to come, knowing that the markets and the Fed has their back. Do not underestimate how powerful a rush back into equities could transpire. Short sellers, bear traders, they want to defend this key transition point really at all costs to avert further damage, put in a marginal new divergent high with only negative and bearish divergences that would continue to construct in all three or four technical momentum indicators for a much larger and or bigger drop to come. I believe that could be one of the biggest lines in the sand for the US 500 space. You out to the US Tech 100 NASDAQ futures based upon the daily interval. And once again, I have been hyping up this primary reactionary uptrend line with major now reactionary confirmed lows, especially if you're an active and or day trader, really to the button there, netted you 2.2% in gains to the upside. And that divergent high and the negative bearish divergences are still intact slightly here in the RSI. And a moving average convergence that has really just consolidated and flatlined. I believe the tech space is probably the weakest looking when you consider the stochastics 1033 really curving out and inverting to the downside. Make no mistake about it, long traders and or bull traders need to defend this primary reactionary uptrend line, re-challenging the unannounced 1.618 Fibs retracement, call it 17,884 price resistance up above. And that, in my opinion, would be the ultimate line in the sand in unknown territory where if long traders were to take it out, could transpire into a much more bigger market historic rally to the upside and ultimately burning out these negative and bearish divergences that currently exist at the moment. Short sellers, bear traders, they want to see a potential backtest and or re-challenging of this primary reactionary downtrend line, which could be the potential stages of a classic head and shoulder top where you have a left shoulder, your head, and a potential right shoulder leaning, which the primary reactionary uptrend line would begin to mount as the neckline to the beautiful, well-defined head and shoulder top. And short sellers, bear traders, they want to see a solid daily infused candle close, big breakdown sell signal below, which would encourage a ton of selling and or stops to go off. And that is where the beginning stages, I would believe, would provide the most greatest valuable, big risk reward short trade swing setup to the downside, ultimately reflecting and re-challenging its 50-day moving average and a key additional targets down below, which would be around the 16,913 range for any short covering and or additional price targets to hone in on down below the 1644.7 if and when these key transitioning levels were to be undercut. Taking you out to the US 2-year yield based upon the daily interval, and we are challenging major reactionary, we'll call it multi-year price support off the August 2022 major reactionary lows, cuts right through some of this big 1, 2, 3, 4, 5, 6 major reactionary lows, and this would be, call it 7, with a whipsaw-like reaction where we backtested the 414 price support, and this is just call it a dual price support level in confluence of the 419 additional price support, major reactionary high and low, really across the entire sphere here. And this is a big level to watch where short sellers and or bear traders need to defend these multiple key transitioning price support levels. And I believe would issue in some potential positive, exaggerated positive divergence if and when some of these, if a sell-off continues to transpire in Bondville, that, in my opinion, would issue in a positive and or bullish divergence on really all 4 technical momentum indicators. And that would be a transpiring move and put heavy support and or weight on the US Tech 100 space, where I have this additional inverted parabolic downtrend line with major reactionary highs across the entire sphere. That would be the initial first target if and when some of the bond markets and or starts to begin the process of selling off here, ultimately potentially trying to take this level out to re-challenge the 236 Fibs retracement, its 50 exponential moving average, and the 4.4 price resistance up above with major reactionary highs there. Call it a triple transitioning price support level. If and when taken out, I believe would issue in a ton of stops to go off and or margin calls, ultimately flushing out the 2-year. Long bonds and or bull traders of the 2-year want to see a solidified breakdown sell signal within the yield and additional price support down at the re-challenging of the 404 price resistance, and that would be a very telling move if and when we go on to reflect and re-challenge that key level, only hinting at near-term and or upcoming, within a matter of weeks and or months, a deflationary and or disinflationary event. Taking you to the long end of the curve here, and once again, a major concealed primary reactionary uptrend line with just a plethora of reactionary lows really across the entire space here. And this is going to be a very telling and key pivotal transitioning point if and when long traders, bull traders were to break down the yield and re-challenge this primary reactionary uptrend line in correlation of the 4.05 price support level, called a major duo multi-year price resistance level, which would have the increased odds of major reaction by short sellers of the bond. And you could additionally make the case of a potential head and shoulder classic looking top if and when that counter trend rally, snapback rally back into the 236 pips retracement and 4.2 price resistance could occur for a major bigger breakdown in what you would call the neckline of this primary reactionary multi-year price support level in confluence and a re-challenging of the 0 fibs retracement at, call it, 3.94 price support level there. And these are your big levels. Watch these key levels if and when we were to take and or take this 236 fibs level out. And ultimately, the 236 fibs will come in correlation with its 50-day moving average and its 200-day. This is the beginning stages of a well-defined death cross continuation pattern within the moving averages of the 200 and 50-day moving average. Can usually ultimately mark the bottom in price action as well, not only defining a much larger technical damage being infused into the price action of this security. This could ultimately mark, when you are at the beginning stages of puncturing the death cross, it could ultimately mark the bottom for yields, re-challenging what you would call a triple transitioning point of price resistance, and ultimately taking that level out would really, in my opinion, spur some inflationary scare once again, reacting to the headlines and re-challenging this primary reactionary downtrend line off the 2023 October reactionary highs, and that would be the ultimate safeguard for long traders and or bull traders of the 30-year to defend heavily if and when that level is revisited once again. Ultimately, short sellers and bond bears want to take and pop this level, ultimately re-challenging the 382 fibs retracement and putting further the utmost damage back into the US tech space, rattling growth stocks to the downside. Taking you back out to the US 560-minute time frame, and there are some key adjustments that I'm willing to construct here, where I will move the 48.47 price support on a little bit tighter of a fix below these major reactionary lows here, call it 48.44 price support if and when some of these levels are once again retested or reevaluated. Make no mistake about this key transitioning price support level. This has been really a very bullish telling sign when the entire move was completely retraced from a pure technical standpoint. That is very bullish. Long traders, bull traders will be looking to defend the 49.29, what I would call minor price support here. And that would be a very telling move if and when we could even begin the phase of consolidation range for the overnight range, where the non-farm payrolls are to be released tomorrow with the unemployment rate and the average hourly earnings. That could be the beginning stages for a potential undercut and what you would call a classic, well-defined island cluster top if and when we take that level out off the 49.29 price support level, offering an additional near-term and or active day trading bigger move to the downside on a re-challenging on a potential of the 49.03 price support. Long traders want to potentially consolidate a little bit more violently and move away from the primary reactionary uptrend line in a safeguard space on a prolonged setup to the upside. Do not underestimate how quickly a big rush back into equities could transpire.